So we're into the second month of our small account and things are looking pretty good. So if you haven't watched the first episode of this series, I'll leave a link in the description down below so you can catch up on it. But as a recap, the purpose of me running this small series is to become like a diary of sorts, tracking my investments, and maybe one day we can look back at this series and decide if we made a right decision or maybe we didn't. So last month we purchased A17U, which is Capital Land Ascendants REITs, and that REIT looked at a few different types of real estate around the world. So we bought it at an average cost of $2.76, and we spent a little more than our $200 budget for that month. But we got a small little win because right now the stock is valued at $2.80, which means we have a profit of a little bit more than $5. But this month, or maybe for the month of October, it has been rather busy for me at work and I haven't had much time to really sit down to plan my thoughts. But I managed to squeeze out some time to really pen down this episode. And this episode is going to be really short and sweet, so for those of you that are watching, you get the gist immediately, and I also include my rationales of why I'm buying what I'm buying. But then again, as a disclaimer, these stocks or these investments that I'm doing, these are purchases that revolve around my life and my expertise, so do read up a little bit before purchasing any of these. And for the month of October, I wanted to make things really simple because it's been really busy like I mentioned, and I believe most of you that are watching will probably have similar lifestyles if you are working in a day job. So for the month of October, I made a purchase of ES3 or STI ETF. So for people who are new to investing in the market, there are a few things that you can purchase. You can purchase direct shares, you can purchase indexes, you can purchase ETFs, which are exchange traded funds, and you can purchase options as well. So I bought the STI ETF, or for the longer term, it's called Straits Times Index ETF. And an ETF or an exchange traded fund is a basket of assets put together and sold to investors like you and me. And think of it like a basket of stocks, of commodities or options, and all put into one. So another way to think of ETF is like entering a restaurant, which is the stock market. And then the items on the menu are bonds, options, stocks, etc. And as a customer, you might be overwhelmed and not sure what to get. But there is this section here that shows you a sample plate. So now, instead of buying a full burger, you can get a few sliders at a similar or lower price, so you get to try and taste a few different things. Which for the regular folk might be interesting because you might not know if you want to commit into a full meal, not knowing if you like it or not. So with STI ETF, this ETF was built to track the performance of the Straits Times Index, which are the top 30 performing companies in Singapore. And if you go to Yahoo Finance, you can see the top 10 components of ES3 are things like DBS, OCBC, UOB, Singtel, Jorden, SGX, Capital Land Commercial Trust, ST Engineering, Capel, and Capital Land Ascendants REITs. And now you might have a thought in mind. If the ETF consists of all these shares, wouldn't it be expensive? So even though the ETF consists all of these stocks or shares, the beauty of the ETF is that you can get a small little exposure to all of these stocks that I mentioned. So in ES3, for every one ES3 you hold, you get 25% exposure into DBS, 13% into OCBC, 10% into UOB, so on and so forth. So this is good for passive investors who don't have time to manage their portfolio because the firm behind ES3, which is the State Street Global Advisors Singapore Limited, they do the fund rebalancing for you at a small cost of 0.3%, or what people call this expense ratio. So with every ETF, there will be an expense ratio, and that's something for you to think about before you purchase an ETF. So something that I really like about ES3 is the yield, which is currently sitting at 4.13%, and these are dividends paid biannually in February and in August. So if you do get enough ES3, you essentially get a small bonus every February and every August. But now let me tell you the downside of ES3. So though it seems that ES3 might be the easier way to stay invested, but there are downsides as well. So one of the biggest downsides is capital gains potential. Since the ETF consists 30 different companies, they are not weighted evenly. And looking at the breakdown by sector, financial services takes up almost 53% of the ETF, which means that if there is a financial crisis, ES3 will be heavily affected. But at the same time, this also means that if there's a boom in a certain sector, like finance in this case, there will be a spike in prices. So all in all, that's what we bought for the month of October. And this time I really stuck to the budget of $200 and bought 44 shares, which cost us $4.53 per share or $199.32 in total. And as of this video, our small account portfolio currently sits at $644.50 with $475 in securities and $155 in funds, which I might cover in a future video. So as promised, this video is short. It's a very quick update, and I really appreciate if you guys could hit the subscribe button, share this video, and as always, I hope you guys stay safe, invest safe, and I'll see you guys in the next one.